India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. The Tuesday morning, early part of the week. Yesterday was a good session after, of course, poor GDP numbers. And does that set us up in a nice way for some more continuation of what we saw and how we closed yesterday? I'm Prashant. With me, my colleagues Surabhi and Nigel. Guys, good morning.
Hi, morning, folks. Well, I guess the bulls managed to climb this big wall of worry on growth yesterday, right? And today morning, the setup is not too bad and things are looking quite okay. World's a quiet and calm place. So who knows? Maybe more.
Maybe some consolidation in the near term as well. And we're climbing the wall of worry. But I think, at the top, there is a bit of an issue. So let's see whether or not
they
have enough, 150 points.
Oh, God, did I just give away my age? That's a really old one, right?
I think it's been 15 years since the last one.
Oh, my God. Okay, let's move on, guys.
Vinci, what?
Nigel in... My God.
The spider goes up and the spider climbs a couple of steps down.
Anyway, I mean...
markets, guys.
Okay, all right. Well, we got markets to track, right? So let's, as always, begin with where US left off. And, it's a good way. The US market started December, last month of the year. Seasonally, it's a better part for equity markets for US and India, everything. So S&P was up a quarter. Nasdaq was up about 0.96%. So that's a pretty good handover. 10-year yield, 2 basis points up, 4.19%. And the dollar index is up about 1/3%, about 106.38. Now, remember, last week, treasuries in the U.S. rallied. Yields came off sharply. I think almost about 25 basis points or so. And that largely was on the back of Scott Bessent being appointed as a Treasury Secretary over that weekend. So last week was a big one. I think now markets, of course, are reassessing. There's still 40, 50 days to go for Trump to take over in terms of the inauguration. So we'll be here more between now and then, or, as we head into the rest of the year, announcements and proclamations, etc., will slow down a little bit. I think it'll depend on that. Dollar also had a bit of an up move. Now, ISM manufacturing numbers came through. They're still in the contractionary zone, mind you, but they were better than expectations. 48.4, estimate was 47.5. And the new orders component came in above 50 for the first time since March. And this, I think, is good news. By the way, you also had the S&P PMI numbers, the final reading of the November PMI in the US, which was also revised up. So actually, in terms of data, it was not a bad day. You had Fed Governor Waller, who usually leans hawkish. He said, a cut in December from the FOMC is likely if data does not surprise. And by the way, we are going to hear from other members as well. I think Fed Chair Powell speaks on Thursday. And of course, then there's the monthly jobs data, etc. Now, oil prices 1.5% lower, about just under $72 a barrel. Euro USD, will not break parity? I mean, that's essentially the big debate. We broke 1.05 and then kind of came back above it. Key political parties in France, and of course, the crisis point right now in the euro area is France. Key political parties are going to vote for or against. Essentially, it's a no confidence motion against the current government tomorrow. But the expectation is that through the course of the day today, we will see some headlines in terms of which way this really goes, or is there a last-minute compromise or not. So that is Europe for you. Just to circle back and tie in the levels here, the market closed around the 40-day exponential moving average yesterday. The recent high, which we've put out for a few days now, 24,351 is the first resistance to take out, which we've not been able to for the last at least 6 trading sessions now. Support comes in at the low of 23,873 on the downside. Nifty Bank, the picture actually I would say is a little more unclear as compared to the Nifty. But here, resistance at 52,680. These are very near-term levels. And support for the Nifty Bank comes in basically at where the recent low has been for the last 3 sessions, which is around 51,760. Although yesterday we did break that level. And then, of course, the Bank Nifty staged a big intraday rebound. The GIFT Nifty will come up on your screen. and it'll give you a sense of how the index is starting, about 4-point change. So nothing on it, at least at 8 this morning. There is, of course, other big news as well locally, which I think I suspect will dominate headlines and GST.
Yeah, absolutely. It's a huge exclusive that our colleague Tinsy has picked up. More on that in just a bit. But let's quickly check the Asian region as well. Actually, Asia is doing really well. It's taken off from Wall Street. And barring the China markets, mainland China and Hong Kong, don't look at those two indices. Yeah, these are down. But look at the other ones. Taiwan's up 1.5%. Nikkei is getting a roaring rally moving along. Over 1.5% up in Japan. Singapore is higher as well. Korean markets are doing okay. Inflation print has come out in Korea. Inflation continues to inch higher over there as well. And you remember the central bank had already cut rates in Korea. So that's regional news. Markets are doing pretty well. And the overall global setup is quite positive. I think it's just looking out for more clarity with the jobs report on Friday and then eventually, reading into the Fed's mind and what the FOMC is going to do later this month. 17th and 18th of December is when the Fed is meeting. So right now, cruising along. Now let's get to that big CNBC TV 18 exclusive. Now this is something that before that, yes, I forgot to mention the flows as well. The flows picture is not looking too bad. Now, yesterday's sell number is just 238 crores. But before we start jumping and rejoicing, let's remember that there were a couple of large block trades that happened yesterday as well. Cipla was one of them. There was also Home First. So a lot of the buying and selling in these trades is also skewing the FPI data to an extent. So we need to kind of keep that context in mind and look at it with that prism. But yes, for what it's worth, at least we are not looking at a huge slam dunk on the FPI number, at least yesterday. Now coming to the CNBC TV 18 exclusive, and that is GST. It appears that there are a lot of big changes that could be on the anvil. What Timsy has picked up, and we'll have her on the show in just a bit, what she's picking up is the group of ministers could be proposing major changes. Now, what are these changes? Number one, look at a brand new rate above the current highest rate, which is 28%. Look at a new rate called a special rate of 35% and put this on some of the sin goods like maybe tobacco and maybe aerated drinks. The other very interesting aspect that Timsy is talking about, what she's learned from her sources, is that for a lot of consumer items, the GST rates could be dependent on the price of that item. Now, that could be watches, it could be shoes, it could be, ready-made garments as well. So the higher priced items, the thinking seems to be they should be getting the higher rate. If you're buying shoes worth 15,000, for instance, above 15,000 rupees, and you should be paying 28% tax and not the lower tax. So that seems to be the broad thinking. And let's see how a lot of these stocks react, because in some cases, this could mean that the rate starts going up. However, the good news comes in for insurers, and this is something that we've been reporting on for a long time, and it seems that GOM is now going to propose that you offer some relief on both life insurance and general insurance, especially to senior citizens, which is, of course, a long-standing demand from the industry as well. So a lot of stocks, textile, apparel, shoemakers, shoe retailers like Metro, and, of course, the insurance names, watch out for all of them. They could be dominating headlines. Last but not the least, lots of other corporate action, and our team will tell you more about this as well. Precol and Nazara are both in focus. Nazara has announced a bunch of acquisitions. We'll talk to management as well as we go along. Torrent Power is doing a QIP. So lots of individual company-specific action that will dominate. But the bulls will hope, Nigel, that that momentum that they had yesterday, that continues today.
Well, indeed. And in fact, the only problem for me is that the dollar index, that's looking relatively stronger, which could be a bit of a worry. But otherwise, what did the FIs do in yesterday's trading session? Well, on the F&O front, they added more shorts than longs, and they added close to around 3 shorts for every 1 long position. And in terms of positioning, well, it's close to around 67% of their positions on the short side. Even in absolute terms, the FIs, well, they are net short with close to 100 lakh contracts on the short side, while the clients, well, they are at around 1.8 lakh contracts on the long side. The PCR number should come up for you as well, and that is at around 1.22, which is the higher end of the range. It's moving towards the 1.5 odd. As of now, it's in the middle of it. At the lows, it goes to around 0.7. At the highs, it's around 1.5, 1.6 or thereabouts. And the options data suggests that we're in this broad 500-point range. So 2 strikes that were active come up for you on the screen on the call as well as on the put side, which brings us to those levels. On the downside, that 23,900 mark becomes very, very important. On the upside, resistance comes in at around 24,400. This is going by the options data, going by last week's highs as well as last week's low. So that's why I'm looking at that broad range. Once we get past the 24,400 odd mark, then you're looking at the 50 and the 100 DMA. That comes in that vicinity of around 24,650 odd mark. Well, the Nifty bank, that's the one that's underperformed for the last couple of trading sessions. And it goes to this level of around 51,600, 51,700. And from there, it's seeing a bit of a bounce. So on the downside, actually, looking at the DMAs as well in the technical levels, that 51,500 mark becomes important. But for the last 2 sessions, the Nifty Bank has been a relative underperformer. Stocks that I'm looking at. Yesterday, PVR had a good close in yesterday's trading session. So if you looked at the chart, well, it ended virtually at the high point of the day. And it appears there is some excitement ahead of Pushpa 2 release, which is later this week itself. I've spent some time with Allu Arjun, and in fact, that superstar will be bracing for his brand to get built on even more, because rough estimates suggest that on day one, the global collections could be nearly around 300 crores, which will be shattering a lot of records also. So yesterday, technically, the stock did have a good close in trade. There is some excitement ahead of Pushpa 2. Let's see whether or not it is the blockbuster that the street is anticipating. But that one, in fact, in yesterday's trade looked quite good. As I mentioned, ended higher. So keep an eye out on PVR.
Okay.
Nigel, I thought there would be a picture there.
I would have liked it, but I didn't want to push up
You as
producers
a star
to that.
on the poster.
And brand Allu Arjun, I mean, it's going to be something to look, I think.
Okay, so plenty to track the stock and the movie. But let's kick it off then with the equity call of the morning. Sandeep Tandon of Quant Mutual Fund says that they earlier raised the specter of worsening economic and corporate data, both of which are now bearing out. He says although high-level macroeconomic and corporate earnings data merit tracking, most of it, if not all of this, have been below estimates. Data are factored in, and timing is ripe for being optimistic about selective segments of the market. He says, hence they are now close to fully deployed and believe that risk-off phase is in its fag end stage. That's a bullish view coming in, that the data is backward-looking. Look ahead, it's time to get optimistic. That's Sandeep Tandon.
Okay, well, and we'll get you more views as we go along.